you're doing well. I don't know what my brother's been up to, but I'm having a blast. Hey, we're going to be talking about headline inflation. Sorry, not headline, wholesale inflation, why it's important. Wholesale inflation. As the cost of goods for manufacturers and suppliers of everything we need goes up, they need to eventually pass that on to the next in line, right? The retail chain. Then eventually it comes to us. And what's really important is to watch these wholesale numbers because we can identify how inflation is going to affect us in the near future, the next 30, 60, and 90 days. All right. It's a really interesting balance, though, between companies that are trying to compete with others because they don't want to raise their prices because they want to stay competitive. But eventually they start to pop up. And then the other company goes, oh, we can raise our prices. And they start doing this. And it just gets really, really bad. But ultimately, what does it do to real estate? It hurts it because costs get more expensive. Now, next, the Real Estate Ninja, I've been told, is going live like 10 minutes after this one. So if you want to check that out, there's a whole slew of bad information when it comes to real estate over there. Let's dive into the Fox Business News story. Also, one last thing, the $250 cost for the course, the 75% off, that's done and closed. Everybody just got enrolled in Home Seller Pro for free. And there's another class that you are getting for free sometime before January. That's the next one in line. And we're bringing back the $199 to 80% off because so many people were saying, simply do not have the money, but I want to invest in real estate and I want to start seeing what I can do now. So I'll put 5 of those links down below to the $199. Okay, but the 251 that's closed, and that is going to eventually by January it'll be 3 classes for the price of 1. All right, here we go. Out of Fox Business, wholesale inflation accelerates more than expected in September. It says inflation at the wholesale level surged more than expected in September, underscoring the challenge of taming price pressures within the economy. The Labor Department said Wednesday that its producer price index, which measures inflation at wholesale levels, before it reaches consumers, climbed 0.5% in September from the previous month. On an annual basis, prices are up 2.2%, the largest increase since April. Those figures are both higher than the 1.6% headline increase and the 0.3% monthly figure forecast by Relative economists. They go on to say here, today's PPI suggests we haven't seen the end of sticky inflation. Don't you love that? I remember when, type 1, if you remember when Jerome Powell comes out and says, inflation's not going to be everywhere. It'll be transitory. It'll be here. It'll be there. And then it'll be everywhere. That is literally what he said. And now we're talking about sticky inflation. Yeah. It's just funny how they've screwed everything up and now they want to just cover it up. And what's really scary is a lot of our family and friends actually believe they're crap. All right, it says here, we haven't seen the end of sticky inflation and high interest rates, said Mike Lowenrogart, head of model portfolio construction at Morgan Stanley Global Investment Office. Either way, investors will need to remain patient. Isn't that a nice way? Like, when's this crash coming? That's what Ninja Nation's saying. It's like, come on, can it just come already? We just want to buy up all these houses. All right, either way, investors will just need to remain patient. Lowering inflation significantly from last year's highs was one challenge. Getting it down to the Fed's 2% target level is another. Americans see high inflation sticking around in the latest New York Fed survey. It says here, in another sign that suggests high inflation has been slow to dissipate, core prices, which include the more volatile measurements of food and energy, rose 0.3% for the month. That is higher than both the 0.2% estimate and the reading recorded last month. Well, isn't that weird? The government's wrong again. The figure was up 2.2% on a 12-month basis. The data comes one day before the Labor Department releases its more closely watched Consumer Price Index, which measures the prices paid directly by consumers. The gauge is expected to show that inflation cooled ever so slightly last month as high prices continued to squeeze consumers. Oh gosh, the pressure on consumers is immense. And a story that I'm going to be doing my brother's going to be doing on the Economic Ninja channel in about like 10 minutes after this one. What's going on in Canada with their homeowners? Holy cow, they are about to refinance from a 2.2% mortgage, 2.5, to a 7, and they're being forced to do it. You are going to see such an epic crash in Canada. Type 2 if you're from Canada. All right. Both releases are considered to be Important measurements on inflation, with the PPI believed to be a leading indicator on inflationary pressures as costs work their way down to consumers. The different gauges point to inflation that is still running above the Federal Reserve's preferred 2% target. Geez, oh, who writes this crap? Of course. Can we get a big duh? All right, the back-to-back inflation reports will have major implications for the Fed, which is tightening rates at the fastest pace in decades as it tries to cool the economy. Actually, they're trying to break the economy, and we're going to be sitting back reaping that reward. The central bank has improved 11 rate hikes over the course of 16 months, lifting the federal funds rate from the highest level since 2001. It says here, policymakers skipped a rate hike at their most recent meeting in September, but left the door open to an additional increase this year. However, in recent days, many Fed officials have suggested they could be done raising rates thanks to the recent run-up in long-term Treasury yields, which influence financing costs for households and businesses. Well, the truth is, households and businesses are getting squeezed at a rate that they have not seen in recent history, and this will lead to an epic collapse. We're already seeing price declines around the country. When it comes to housing, we're seeing housing sales fall off a cliff. Nobody's showing up for open homes. As a matter of fact, type 3, if you're seeing a ton of open house sales, those were non-existent the last 3 years, not only because of the masks and all that kind of stuff, but because real estate sales were red hot. They're not anymore. So there now has to be price concessions, all kinds of things. And I can't wait, I'm not joking, for those foreclosures to hit the market this next late spring. And that is going to be an exciting point. So we all want to be ready. We want to have our cash on the side. We want to have inflation hedges on the built up. That's your thing. That's not me. I'm not a financial advisor, but I'm ready to rock and roll. Hey, Daryl, I hope you're having a good day. All right, with that being said, the Real Estate Ninja is out.